Colin Rusch just predicted when Tesla stock will level out, meaning when it will reach the bottom. There is no one else who is ranked higher on Wall Street who analyzes Tesla stock, so we want to pay attention to what he has to say. However, even when Colin makes predictions, he's more often than not wrong. However, when he is right big time. And currently Colin says, hold Tesla stock, don't sell and don't buy, just hold. So let's take a look what he said on TV today.
Let's bring in Oppenheimer senior analyst Colin Rusch. How do you read the price cuts, Colin? Some people are saying it helps them actually qualify for some of the EV credits in the new legislation to have lower prices. Do you think it's a demand story? What is this about?
Yeah, I think it's multiple things. One, certainly there's some concern around demand, and all the commentary around going into a recession. It looks like there's some inventory that's been built in China. But I think this is, an example of a good offense being a defensive move. I think they're going after this market, getting into consumers' homes, building some goodwill with folks around the price moves as folks make some decisions around buying new vehicles. And they're going to push a lot of product into the market as a result. We still think there's very compelling economics from a total cost of ownership perspective for EVs, and this makes it very compelling both in the US and Europe with where these prices are going to shake out.
We now have data that shows us how inventory levels have changed since the price cut. So we started with 4,128 vehicles, and the number must have been a lot higher because Tesla does not show duplicates in the same location. So this is where we started, and this is where we were 12 hours after the price cuts. 50% of the inventory vanished. 4 hours after that, 60% of the inventory from the moment the price cuts happened, 60% of inventory is now gone. And it hasn't even been full 24 hours yet. I'm so looking forward to seeing where we will be by the end of tomorrow.
Where does valuation stand now that Tesla's had such a big sell-off over the last year versus estimates? With some still cutting, saying the numbers are too high.
Yeah, I think we're waiting for the fourth quarter numbers to look at where they shake out in the fourth quarter because they didn't sell everything they produced, and so there's potentially some headwinds there.
When you look at the backlog of Tesla, it might be a little bit confusing why Colin is saying that Tesla did not sell every single car that it produced in the last quarter. Because you look here and clearly there is a backlog. You have to keep in mind a few things. First, as you can see in China, there is no backlog at all. There's no red here. And when we dig into specific models in specific regions, for example, we look at Canada and we can see for Model Y, we had 46 days of wait time, and for Model S and X, 81 days. But when you see 7 days, that basically means there is no backlog, according to Troy. And we can see that there were multiple models like that. And when you look at China, there was no backlog at all. When you look at the rest of the world, so this would, I think, include places like Australia and other small countries, you can see that these countries do have a huge backlog. But because these countries are small, in wait time, it might be a long backlog, but in units, you can see this color right here. It shows the rest of the world. It's a very tiny amount. And then most importantly, in China specifically, Tesla had 25,500 unsold Model 3s and Ys. So this is what Colin is talking about.
We're also seeing a lot of the commodity prices come down to levels that it could turn into a tailwind for them on margins going into 2023. I think we're looking for some incremental information from them when they report here about where margins shake out. Historically, the company's pointed to Porsche-like margins in the mid-30s as a potential for the company, and certainly this is a process of industry building and a technology node change, and so there's going to be some ups and downs downs here. I think we want to see where it's going to level out here in the next quarter or two, and start thinking about what this looks like long term as some of the new models get into the market. But I think that we're going to see a little bit of a dip on this pricing dynamic, and we'll see things start to level out by the second half of the year for the company.
So Colin would be expecting a bigger dip for Tesla stock short term, and then sometime, I guess, after June, second part of this year, leveling out, meaning the stock would be stabilizing. Well, we'll see. If you copied all of Colin's trades since 2011, only 49.5% of your transactions would generate a profit, meaning more than half would lose money. However, Ben Colin is right. He is right big time, and that's how he produces these crazy high returns. I myself, I keep dollar cost averaging and buying more Tesla stock. There is a new note from Morgan Stanley as well. They are saying that, bottom line, Tesla's price cuts are, all else equal, an adverse fundamental development versus market expectations, but we believe potentially far worse for their EV competitors. Could Tesla's lower prices stimulate higher demand? Sure, says Morgan Stanley. Can aggressive pricing discourage or drive out competition? Probably, says Morgan Stanley. I think it should be sure, not probably, it should be sure. But at a time of slowing economic growth and rising rates, we don't think investors will give Tesla credit for these offsets at this time. Highly possible. Everyone is still scared. Everyone is still worried. And if we have a national recession, people are going to lose their minds. We would encourage a conservative approach in factoring in the price cuts required to achieve the volume forecast and discourage adding additional volume to Tesla at this time. So we are saying, don't get your hopes up for deliveries just yet. Be conservative, and it's better to be conservative and to be surprised than to be too optimistic and then be disappointed. That is, I think, what they are saying. They are not saying that Tesla will not do high volume this year. They are just saying be cautious. In an environment of EV deflation, we believe Tesla's strong balance sheet, cost, technology leadership, and scale will be critical to solidifying their competitive advantage. Within a painful reset of EV expectations globally, we see Tesla as a winner and reiterate our overweight rating, says Morgan Stanley. Basically, buy Tesla stock is what we are really saying here. Like, buy a lot of it. Their price target remains $250. And they do expect slightly lower earnings for 2023 compared to 2022. And then they expect Tesla to really start growing again. This is Morgan Stanley note from another day. And here is what they think. Literally, they actually put in this picture in their note. And they think the EV adoption is going to slow down for now. If Tesla surprises us with their compact vehicle being released sooner than everyone is expecting, then this is probably going to go like this. There's going to be no flat lines. It's going to be all straight up. Either way, Tesla will continue growing deliveries by 50% on average year over year. This is what I personally believe. And other automakers, well, they might really struggle. And we also have Gary Black reducing his earnings per share estimates for 2023 from $5.50 to $5 now. However, when we look at the auto gross margin, he is still projecting 25.3% gross margin, so only a difference of a little bit over 3%. Not a big difference really when we cut prices so much. And he slightly lowered his long-term projections as well. which reduces price target from $400 to $370 for the next 12-ish months. Gary is also projecting that eventually the gross margin would come back to 30% by 2030. And this is why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.